Hello guys, I hope you're good. I hope you are good. Alright, so here we're gonna have US30. I'm looking for the bullish price action here. Right. So now let's study what's happening in this chart. If you remember on my WhatsApp channel, not WhatsApp, on my Instagram, I told you that I'll make a video. Right. That video is based on the lecture that I'll be sharing here. Right. So first thing first, we should be able to see that we have that uptrend. We see that uptrend. So usually what do people expect? They will expect a continuation, given that once we take the buy side liquidity, or maybe we break structure at this level, POS, we break off structure, they want to do what? They want to go long here on these levels. They want to go long on those levels. And then I would think, if you want to go long here, where is your stop loss? Where are you going to place your stop loss? Obviously, you're going to place your stop loss below these specific levels, right? So now this picture is actually, okay, the stop loss will be here. And then for target, because I have two positions, okay, so target, we'll take one there. Right, so I don't want this video to be long. Right, so now remember this level, they want to do what? They want to buy at this specific level. You understand? So now what I'll be showing you here, it's called, here we focus on the last bullish, the bearish candle. You see that last black candle? That's where we focus. Right, so that candle, what do we call it now? So they're gonna use that candle as a reclaimed candle. That will be our reclaimed candle. Why is it a reclaimed candle? It's because when everyone was looking to go long here, was stopped out. So now if we go above at the right times, we expect the market to find support at that level, which is our reclaimed level. Right, so you can even see this one, it was also the reclaimed candle here. See, we went higher and then we came, then half past 8, which is 2:30 South African time, we found support here to the upside. Right, so same thing as this candle. As long as you understand how it was formed and when the masses were trying to go long after maybe breaking this high, looking to go long at these levels, so that's not the right time to go long. What they will do, run the sell side liquidity, they take all the stops and then they reprice to the upside, and then it will come. And then when it comes at the right time, it will find support at that very same candle. Right, so what do you call this? That's a reclaimed candle, or you can say a reclaimed zone, but the zone obviously it's formed by what? It's formed by the candles. Understand? It's formed by the candles. And then for target, to believe that you wanna go there, we can take the fixed range volume profile, and then obviously we can see already. Honestly, we can see it's telling us that there's high probability that we're gonna go to the upside compared to the downside. Right, so let's study the volume. So you see here, you see you have the red here, so you have that red and then you have that orange or yellow. It starts peaking and then it drops. So do you see that this red and then there's what? You don't see this red portion. It's not there. It means these levels are the lowest. These levels are the lowest. So most definitely we should reprice towards that high there. So we should take that level. Understand? By just studying what we see on the volume. Right. So I hope it makes sense. I hope what I'm saying it makes sense. So in essence, it's something like this. So when they expect to buy, example maybe here, the market will liquidate and then it will go higher, and then it will reclaim at that specific level. And then when it's going higher now, what do everyone thinks now? They think break market structure to this level, and then now they are ready to do what? They wanna go short here. And then remember, if it's a reclaimed level, it means it should hold for bullish. So already now from here, which stops are we attacking? This one. Why do we go there? Because masses, I think we break market structure here, and then they are looking to go long, they call it door or whatever they call it, but here it won't work because already the market, they will do what? They will reclaim that specific candle there, and then when they reclaimed, it means they use it again, but now it's still the very same level there. Understand? So they reclaim, and then we can look for longs here, and it will be high probability when it's at the right time that you should be looking for a setup. Understand? So far what I can even do, I can even partial close one position, right? I can even partial close one position there, so that I know for sure there won't be any losing trade, even if it wants to do what? To retrace lower to attack that level there. Understand? So you'll never know whether it will go to the downside, but highest probability now, everything is showing that it's actually willing to do what? To reprice higher. Understand? So don't forget, this is the reclaimed candle we use. The last candle, which is bullish, which is bearish when you wanna go bullish, right? So we're using this candle. They'll buy here, they'll think it's in profit, they get stopped out, and then it comes back again, and then it finds support. And then also look how only the wicks are allowed to go at that bottom, are allowed to close below this level. Only the wicks are allowed, but look at the bodies. All the bodies are staying inside of this level. So once we see that, we know that's highest probability, right? And then what do we have now? Remember, we also want to have this relative equal highs there. So as it comes lower here, it's just engineering more liquidity. It's engineering more liquidity. Why more liquidity? It's engineered there. It's because we have this specific bullish candle. So you remember, after they say we break structure, usually you wanna do what? Usually you wanna go short on the last candle there. But it's a bullish market, and usually when you see the engulfing, according to the candlestick patterns, when we see that we're engulfing the previous candle, now they start to trust that it's going to the downside. This is a confirmation, right? The stops are still here above. So now they are thinking, no, we are profiting only to find out they're gonna just pull back. And then when they start to do what? To go even with more positions to the downside, that's when we actually gonna spool higher, take those stops out, and then deliver to the specific targets that this market it should deliver. You understand? But the purpose of this lecture, it was actually based on what? These reclaimed levels. So this, it will happen on any time frame. You will see it on any time frame that you're going to be looking at. Even on the higher time frame, even on the yesterday's price, I think it was even there. Even here, you see that this candle there, it was reclaimed at that level. Then here, it's still a right time to participate. Can go long at that specific level. You understand? So they reclaim that level. Understand? So understand the easiest way that you will even find more probability is when you understand how does that level form and why is it forming, because usually the masses will want to do what? Market structure. They are ready to buy here. Now they get stopped out, and then it represses to the upside. And then you also see here, look at what the bodies, only the wicks to go below, then it delivers to the upside. Understand? So now they're like, yeah, now we got it, now they're like, now we got it, now we got it. It's going lower. Some people, they just see the candles, they're like, nah, it's going lower. Either way, no matter it's going low. Then it's just an opportunity for us to do what? To go long. Because you have liquidity engineered there. Right, and then others, they start to see, they're waiting for this level. They're like, nah, the buying pressure and stuff. So it comes back at that reclaimed level. Good opportunity for us to add. And it's actually a good thing that I took some here. It's actually a good thing that I took some. Because imagine we buy and then it comes back to entry again. At least when it comes to add, and then we know we secured something there. Right. So it comes back again on the specific reclaimed candle, this candle. Then from here, the stop, it will be here. And then you see this volume, the big one, it's around this level, but actually this is the level that it's trying to refer to. Right, that's the level it's trying to refer back to. Right, so we'll see how it goes. Now we have more liquidity on the upside. Then the stop is just here. Then we'll just see how it goes. And then let me see something. Let me see what's happening on the Nasdaq. Okay, Nasdaq, it keeps on spooling. Right, keeps on spooling. So yeah, let's see. Remember, some, they start to enter here as they see the down candle, they're like, nah, it's going lower to the downside. Right, it's going lower. They keep on adding. The stop are still above that level. So most definitely, okay, we check the sell side. Then after the sell side, what can happen? It can go higher. And then when it goes higher, it will be reclaimed again at a specific level. And then when it's reclaimed, we add more at that level there. Takes us side liquidity here. And then now we're just waiting. Now it's confirmed even more that it will go higher. From here, there's no way it will go below that level. There is no way. So I know these things. So you see this, it's live. This is live. And then you look at the time here. So I didn't record this thing after all. Now I'm recording as it unfolds. Right, like now I'm telling you that once it goes above, it will come back here. So when it comes here, then I will use it again as a reclaimed level. They might even look at this candle, the last one. If we extend, we will be using this one again on this. That is a higher sale over time frame price. This one is the higher time frame. So once you go below that specific candle, we go higher, we close, and then you can come back. And then once we come, we reclaim that level, and then we continue to the upside. There's no way it will go to the downside. There's no way this setup, it won't go where I want to. There is no way. Obviously, there are some factors that I'm also looking at. So we're closing. So what can happen? It can go back. Looking at this last candle, if we extend here, somewhere here, it can find support. But even closing above, it's still fine. It's still fine to even go long at the specific level. So now it wants to go back. I'll just add, and then now it's time to go higher. It's time to get higher. Look at this, low resistance, liquidity run. Hard to see it's low, means you simply draw a trend line, and then remember how everyone at that level will do what? Will be selling with the stops above the level. Right, so it's very easy, especially what I've explained here. So I actually wanted to explain when it happens, not record after everything now. Right, so I want you to understand how I do it and what is it that I'm also looking at, given the liquidity there, given the average fixed range volume there. So I wanted you to see that. Right, I don't want just to record after I take profits there, that I come back this and this. That I don't like doing that. I don't really like doing that. I want to do it as the market it moves, so that even if I'm wrong, you'll understand why I'm wrong there. You will understand why I'm wrong. You understand? So I didn't want to wait, and then after TP, after it has now played out, now I come now, hey, this, no. That's not how I want to do it. So now, if we remember the trend line, that touch, and then if you're setting on the trend, where is the stop? Here and here. So this is the liquidity which is being engineered. Right, it's the liquidity that is being engineered. So if I wanted to, I would just wait for my setup to hit my target, and then I come after. Hey, look for this. No. You have to see it when I do it while the market is moving, and understand why I went along here. Right? In my mind, I didn't even know that it was going to even come back at that specific level. Hence, I said the stop, it should be here. Understand? So I wouldn't know whether from here it will start going higher. No, that's not something that I know. What I know from here, we come in there. That's what I know. Now we attack the stops of the trend line sellers. Attack it. Start with this one. Let's take this one out. Boom, out. Now we're gonna follow with this one. Right. I can also take partials again. I can take partials. Say maybe 100. Just one there. Right, I don't know why I'm doing that. I'm also doing that for in case if now. Remember I already took 2 positions. So even if it can go to the downside, it's not a loss for me. It's not a loss, because if I want to, I can move the stop and the break even. Right, but I don't want to do that now, because I know we need to spool to the upside. Right, so this is what I was explaining here. This will be the reclaimed candle. They're gonna claim it again. Candle. Some they can say zone, but the zone is formed by candles. So I think reclaimed candles is the way. Right. But the most important thing, I think, it's for understanding that the trend, it was actually like this. And then what do the masses do? They like to add here. They want to buy here. They say the trend is your friend, but in this case the trend, it's still your friend, but that's not the right time for you to participate. That's not the right time for you to participate. Right, it's not the right time for you to participate now. Yeah. I'm very tired. So now we did take that level, and then we engineer more liquidity there. So what will happen? You see, if it goes low, it means it will come back at the very same level. Where is the stops? Now the stop, it should be at that level there. So this, you can do it on a higher time frame, any time frame. Everything that I teach you on YouTube, it's based on any time frame that you want to be looking at. Any time frame that you want to be looking at. Right, so we're pushing now. We're pushing. Right, we're pushing. Right, but my entries, my positions, this is just paper trading. My real executions are on MT5. This is just paper trading. I like to paper trade most of the time because these entries, they stay there. You see exactly where I entered. That's why I like to show my executions most of the time, to show the precision. So this is 1 minute chart. So if you go maybe to 5 minutes, it will look like something else. Let me just remove everything. If you go to 5 minutes, you see it will look like this, which it looks like snipers because those entries, you get them on those specific wicks. You see that even on this M5, you will see that they are reclaiming this specific candle on higher time frame. Hence I say this thing is based on any time frame. You see, so that's one on the higher time frame, this one is on the lower time frame. You see that. Let's go. So what do we have now? Engineering, more liquidity. This is liquidity. We have to go high. Remember, they are selling here, and remember the people, they do things different ways. Some they can just sell here, some they can do something like this, and then they will maybe want to sell on the midpoint. They're saying, yeah, this is the entry. Some they will use the last quarter, the last 25%. They're selling now, but they are wrong. Remember, the trend, it was bullish, so it means this level, it should be taken out. Right. It should be taken out. So this one reclaimed. Reclaimed candle. Candles here, you see there 1, 2. But if you wanted to pick based on this time frame, you're gonna pick this one. I always want that we see on a higher time frame. Right. So what you should do, just comment below if you still want more videos. Right. If you still want more videos based on what I am doing here, let me know if you want more videos based on this. That's already this. It's a risk-free trade. It's a risk-free trade. There is no way we're losing this one. There is no way. Already backed close to 3 positions. Right, so I have 1, 2, 3, 4, 5. Yeah, I'm left with 2, as you can see here. So now stop loss on the break even. Right here, you can try to reject, but even if it doesn't do that, boom, we're done. So if you want me to make more videos based on this, just comment below. Right, and then back test, forward test, you'll see this thing, it's there on your chart, it's happening. Right, so don't forget to like and comment and engage. Right, so I don't want to be doing the videos like I'm doing the videos for robots. Then engage on the comment section. Let's try it. Tell me where you're struggling and stuff. Right, so I'll see you on the next one.